All right, Jordi, this week we saw the president and the White House come out and say that you now are going to be able to put Bitcoin and cryptocurrencies into your 401ks. Obviously, this is a huge pool of capital. I think all retirement accounts in America are over $40 trillion. I think that just 401k kind of directed, retirement accounts are about $9 trillion or so. That is more than 2 times the size of the entire crypto market alone. How big of a deal is this?
It's a big deal. I mean, there's been a lot of people that have talked about it online that have been kind of waiting for this moment with inside the crypto space. But again, it coincides with getting more people to focus on it, which really started a year ago because of the launch of the ETFs. But then as this year has gone on, more and more people, you've seen it through the inflows, you've seen it through adoption from the government, allowing people to do it. People had to do their homework first. So to allow it to happen, to access a pool that it wasn't allowed to be involved in is a big deal. And I don't think anyone should minimize it just because of the pure size. But when you go through the most important argument for Bitcoin, I think there's 2 things that hit me as from an investment standpoint. The first one is just how overweight everyone is in quote unquote technology and stocks in general, but also just in fiat assets. So we've all talked about the fact that there has to be this kind of diversification that's going to happen. Well, 401ks are a pool that it really should be happening in, especially because of the story that we've talked about, I've written about. Rick Edelman has gone on a bunch of podcasts and talked about the need to have a significant amount of money into crypto. And he brings up 2 important reasons. One is just the fact that if you're going to live longer, which is what AI is going to bring, you need to have more duration assets in your portfolio, meaning you need to have more growth. And if you're talking about Bitcoin and you're talking about crypto, and now all of a sudden you say, well, I'm going to live an extra 10 years, I'm going to live an extra 20 years, I think that strips out the risk that people have been worried about with Bitcoin, which is the volatility. And so over the longer term, the digital economy is only going to grow. It has grown. Bitcoin has worked. So I think for people that maybe were, in their 70s and not thinking about this, I think when you start living to 100 to 110, it really opens up more and more thought process. So I think the government is supporting this, not just from allowing it, but I think they're allowing now the banks to actually cover it, to actually have people talking about it, doing research on it. So I think there's a comfort level that's growing, and obviously the price performance that helps out as well.
Now, when you see these retirement accounts, one of the things that I keep hearing everyone talk about that's a critic, they're like, oh, why are you going to put this risky asset? Well, how are you going to let these people go and speculate on Bitcoin and crypto? I wrote earlier this week talking about the fact that maybe U.S. Treasuries are actually the risky asset. If you go and you look at TLT or any of these things, they are just down only for 5+ years. I mean, TLT specifically is down 50% in the last 5 years. And so I do think that there is kind of this shift that is occurring in the internet natives who are saying, no, the thing that the traditionalists call safe is actually really risky. The thing that they think is risky is actually safe. Is that going to play out in these retirement accounts where you're going to see more and more people start to say, look, if I have a long duration in kind of this tax advantage structure, then I actually need to get away from things that people have historically thought were safe and maybe push out into assets that maybe otherwise had been labeled as risk assets?
Yeah, so this is, let's go through 2 things here. One is bonds have not performed now for the last 6 years. So there's 2 ways for there to be risk. One is to have volatility and corrections. I continue to say, like NVIDIA as an example, NVIDIA went from a peak of 150 all the way down to 80 and then went back up again. But that move was far more than the downside that Bitcoin saw over the same time period, and not even close when you're talking about this year. So I think what has started to happen, and this really started in 2022, the worst year that you could possibly imagine for crypto would have been that 2022 year in terms of FTX and everything that happened, the regulations coming out of nowhere and just making sure everything stopped. And Bitcoin was down about the same amount as Amazon was that year. When you're talking about the Mag 7 having corrections that are equal to, when you're talking about NVIDIA having a higher implied volatility in the options market than Bitcoin, you're kind of already going through when the largest company in the world, which everyone owns because of their passive weighting, is already there. So I really don't care that much about the arguments on the risk side. I think people have missed the fact that as a retirement person, I think if you have a bond and it's unchanged over 5 years while inflation has been high, and at the same time, you're getting more volatility from the stocks in your portfolio that you own, there is absolutely a place for Bitcoin. And I think that's been one of the biggest changes is we've seen volatility come down sharply in Bitcoin this year.
Now, when you see that volatility compressing, I think there's two different components. You obviously get large pools of capital that are now willing to actually buy it because there's some weird dynamic where they don't want a 100 vol asset, but maybe they're okay with like a 40 vol asset, right? It's like just enough where it's interesting, but it's still safe enough where I'm not going to have to go right to my investors and tell them we're down 90%, every 2 years. At the same time, I think that we have seen historically that there are these periods where you start to get compression of volatility and it kind of acts as like a coiled spring. I think this was, remember Joe from Similar Scientific was saying, if you look at the 2017 bull market, you basically had this compression of volatility. And then right when you really hit kind of the large ramp, it was lulling everyone to sleep. And that's when you got a breakout. How do you as an investor think through, is the compression of volatility something that is a longer term trend and you can start to rely on it versus at the moment everyone gets comfortable and complacent, that's actually when you should expect these kind of very volatile asymmetric breakouts?
Well, it's funny with volatility. I mean, you want volatility on the upside. You don't want volatility on the downside. So, this is the fact. And I heard Jack Mahler's talking about this recently. There's been a lot of corporate treasury activity. You've obviously had a lot of convert selling by Saylor. You've also had them doing these override strategies. You've had new people come into the market in Bitcoin and realize that they could get 10 to 20% returns by just selling, doing either the futures against the cash or selling upside options and just continuing to do it. So I think we've been in a world, there's been a lot of supply that's come to the marketplace in terms of volatility that's helped suppress the implied volatility. I've said with you, I'm going to keep saying it. I think the major issue is going to come that people are forgetting when you're selling upside volatility in an asset that actually has a finite amount. If you start to break higher and people need to go out and cover those shorts. We haven't had a short squeeze yet in this while the institutional buying has been happening. So every time that people ask, how can we still be sitting around 120,000 when Saylor has bought X amounts and all these corporate treasuries have purchased, and you're seeing all around the globe now more and more companies are doing it. To me, that is a function of the volatility. I always reference the Deribit market and just where the strike prices are, but it's more than just that. It is the vol compression coming from Saylor and all these people. The difference is this is not a fiat asset. As it goes higher, you can't go, okay, we're going to issue more Bitcoin. You start to run into a situation where there's a squeeze. And that's why I said, and I still believe it, when I look at the charts right now, they're great. They're going higher. But here's the thing. Ethereum, which is a critical component to the traditional fiat world's ability to put a narrative behind crypto, which has a fundamental tone to it because it's an innovation. They like to invest in innovations. Bitcoin is gold. They want an innovation. Ethereum is nearing a triple top, which is right around the 4,000 level. And then you have 5,000, the all-time highs. I believe once Ethereum gets through 4,000, Bitcoin will race with it and they will both start going. So I think we're getting closer and closer in that. And that's why this whole conversation about volatility compression, I think this is all setting up to bringing in the avalanche where people are going to be chasing and there's going to be FOMO. And I'll bring up one more thing. I've talked about it repeatedly. I believe that in the traditional asset world, the problem for people is going to be they are heavily overweight technology. Technology is going to be disrupted by AI, but in particular, anything built on code. That is the beauty of Bitcoin. Bitcoin's built on code. Ethereum built on code. Here's the code part. The bad thing is for fiat companies, the code that they have is going to disrupt AI. AI does not disrupt Bitcoin. It actually disrupts moats. And so you want to get into the digital economy. You want to get into the place where you can actually be competitive with fiat companies. And that's what I think we're entering into. And I think GPT-5 was a trigger point for that as well.
So we finally found something we may disagree on after all these episodes. Perfect. I don't disagree that Wall Street wants a narrative outside of just buy Bitcoin and hold it, kind of the digital gold narrative. I think they believe that narrative. They've obviously poured a lot of capital into that narrative. They will continue to pour capital into the narrative. This innovation idea, I think that Ethereum is the longest standing one. It's the larger one, but it does feel to me like from a technology performance standpoint, it is inferior to some of the other chains. And I don't spend a ton of time going and, analyzing all these different chains. But when I have used these products, when I've tested it, when I've invested in companies that are using these products, it does feel like developers are saying to themselves, hey, this Ethereum thing is interesting, but I actually find XYZ chain is faster, whether it's Solana or one of these other things. And so what I wonder is how much of the Ethereum capital flow is simply people saying, I bought Bitcoin, now I need to diversify because I have an investment policy statement or something. Well, what's the second largest one? Okay, let me put some money in that. But over time, what you're going to find is as they begin to do some more fundamental research, they say, wait a second, this thing is actually not what I was promised. And instead, I now need to go and actually analyze what's the underlying technology, what's the performance, where developers going, et cetera. Now, I say that because one of the most surprising facts is Bitcoin, new all-time high after 2021. Solana, new all-time high after 2021. Ethereum has not even come close, right? I think Ethereum is down significantly in Bitcoin terms. It's even down in fiat terms from that all-time high. And so I do wonder how much of that is kind of a lagging trade. And, people buy Bitcoin and they push out into the risk curve and you'll start to see capital flow into like an Ethereum and then that'll kind of run and catch up, which has happened in past cycles. Or have we kind of left Ethereum for dead because people have said, okay, hey, that was the trade before. But in an innovation game, it is all about what is the newest, fastest, cheapest, most innovative chain. And it is very difficult, both in a corporate, kind of centralized structure, but also in these blockchains. Once you lose the starting position or kind of lose the hearts and minds, to gain it back is very difficult. And it feels like the mercenaries, they want asymmetric returns. So they're not interested in Ethereum going from 3,500 to 5,000. That's, frankly, boring to them. And I just go buy the stock market for that. What they want is they want to buy something that goes up 10x. And obviously these larger kind of blue chip crypto blockchains are not going to provide that at this point. So they're, as a mercenary, pushing way out on the risk curve and buying things that you and I would probably not even know how to pronounce, let alone understand what they are. The people who are coming in to buy the Ethereums or the Solanas now seem to be kind of the larger pools of capital. Those are the people who are interested in this. And you see kind of the staking announcement from the SEC saying it's not a security. Like those things I do think will lead to a narrative on Wall Street. The question is just at what point do people wave the white flag and say, Wall Street is all talking about this, but the price is actually not going past the former all-time high. Let's move on from it. And I just don't know where that point is. And maybe we don't get it, but I think that to me is a much larger possibility than maybe people are giving it credit for right now.
What's great about this? So when we decided and talked about possibly doing this, I think we both agreed that you'd be coming from an audience that was crypto dominant. I'd be coming from an audience that was macro and traditional finance dominant. So I don't disagree with anything that you said. In fact, I say to everyone, I don't care what token it is, what innovation it is, in a world of ideas become reality in hours as opposed to months and years, there will be insane competition. And I don't want to invest in any innovation and try to pick the bottom and the top of these because it'll happen too fast, which is kind of what you're saying. There's better innovation. That's not I'm looking at it from the group that I know. Mm-hmm. So when they say I can't value Bitcoin, you know how they can value Ethereum right now? They can go, how many stablecoin volume is going to be? What are the transactions going to look like? Ethereum's the connection to that, and Circle is my connection to that. So I'm actually only arguing what people that I know what they need. They need to do the traditional network effects, just like they do for compute, just like they did for Facebook, just like they did for Amazon. They have to come up with a valuation. And the easiest thing for them to do is to look at the growth curves and go, hey, stablecoin volumes are ripping. Stablecoin market cap is ripping. I want to invest in that. What's the best way to play it? And then you go search and Tom Lee shows up saying you want to be Ethereum. So I don't think there's a lot of science in this. I just think that's where people are going to migrate to first.
You know what's funny about this is I don't disagree. That's the logic and thought process. What I wonder is if there's this old saying, I think Mark Andreessen, I first heard him say, I don't know if it was his or not, but he says something to the effect of when a good team meets a bad market, the market wins. And when a bad team meets a good market, the market wins, right? I kind of think of here, it's like when the capital allocators meet the technologist market wins, right? Regardless of whether the allocators are right or wrong. And if you go and you look, Circle, great business. Tether, even better business. Well, where is Tether really popular? Like Tron is this, huge winner there. Now, Tether has also backed, there's something called Plasma, which people may not know about yet, but Plasma is a stablecoin specific blockchain where they think that there are certain things that they can do. Now, I'm aware of other projects which are not yet public and I can't share, but there are very real payment players who are not like legacy, Visa, MasterCard, whatever, that are putting time, effort, and money behind building blockchains that are specific to stablecoins. And so it kind of comes back to this idea of like, will you get one? Will you have many? How does this all play out? I don't think we know yet, but I don't think that the Wall Street crowd, from the people I talk with, understand how much of an assault, like a bottoms up blockchain assault there is on this stuff. And so, yes, it's like very simple. Like, hey, I like stablecoins. Some of them run on Ethereum. Let me buy Ether because that's like my, index on the stablecoins. But if we end up getting, stablecoin specific blockchains, or we end up seeing this kind of proliferate on Tron or these other chains, like it breaks down. And I think that's probably, to me, it goes back to this fundamental question. I think we talked about it months ago. I do think there's a consensus belief that stablecoins are going to be much more valuable and more popular in the future. Great. How do you play it? And historically, you really couldn't, because you can't buy the stablecoins worth $1. It's not going anywhere, right? Yep. Couldn't buy Tether, couldn't buy Circle. Now you can buy Circle. So I think that's a huge reason why people have kind of piled in to Circle stock. Other than that, it is not very clear yet how people are going to play the stablecoins. And so I do think that it is kind of this unique situation where usually there's a bunch of ways to play something and then consensus is reached. And so it's like once people come to the consensus of an investment trade, there's a lot of options on how to express it. This is kind of the reverse, right? It's like, okay, you got to kind of only have half a brain to realize stablecoins should be more popular. How do I express the trade is actually taking quite a while for that to become obvious.
Yeah, I agree. And this is the part of, we didn't talk about it last week. The Chinese have basically thrown in the towel on stablecoins, and now they're really focused on having a yuan-backed stablecoin. So this is an important moment, in my opinion, when people try to connect the dots and they go through it. I've believed all year that all you need for stablecoins is you need it to be a gateway for making it easier for digital asset owners to have a wallet. That's critical, because that was one of the hardest parts. So allowing them to have a wallet to make it easier for everyone in the world to have a wallet brings them into that ecosystem. So Bitcoin at the end ends up being the biggest benefactor to me. It's the network effects. If money's entering the system from the fiat system, then you have more money going there. By the Chinese saying they want a yuan-backed stablecoin, by the ECB putting something out saying we're at risk if the US stablecoin approach, if we don't do something about it. So what the US government is doing is forcing the AI race and the stablecoin race to be connected. These are both and this is what I wrote about this week in Substack. This is a rebellion against governments, and the US is actually helping do it, which I never thought would happen. So for stablecoins, I think people should be viewing it as more and more money is coming into the ecosystem of the digital asset world. It is phenomenally good for digital assets, and you have to be investing in it.